All right, so congratulations to you. You've got a mortgage now and you've got a mortgage payment that's coming due. Perhaps for most of us, it'll be the largest payment we have each month. Now, what's this payment made up of? Okay, well, it's made up of principal and interest that's due on the loan. Remember, principal is that portion of the payment that's paying down the loan balance, and interest is what you're paying to the lender for borrowing the money. All right, so it's also made up of property taxes, homeowners insurance, and for some of you, it might also include mortgage insurance. Now, your property taxes and your homeowners insurance, those are escrow items, which means that they're being collected on a monthly basis and being held for you, at which time when those bills come due, they're now being paid on your behalf. So, for example, property taxes are typically due in the spring and in the fall. So we pay them twice a year, and when they're due, your mortgage company is going to make those payments for you. So the nice thing is you don't have to worry about that. All right. Now, payments for your mortgage are due on the first of the month. They're typically late after the 15th of the month, at which time you will be assessed a late fee. If your payment is more than 30 days past due, it will be reported to the credit bureaus, and that's something you really want to try to avoid because that's a big derogatory mark on your credit report. All right, so remember, we want to keep those scores high, so we want to pay our bills on time. All right, I hope this information helps you. My name is Kisiel. I'm your senior loan officer with Your Mortgage Minute. Thank you.